So it's a very happy morning across Asia. At least for now, most of the markets are holding up in positive territory. Gains range anywhere between, a quarter percent to about 1%. And therefore, the implied open is suggesting that we will also build on the recovery that we've seen over the last 2 days, 55 points higher. What about individual stocks? As usual, a ton of earnings to go through. So we have our team standing by with the CNBC-TV18 list of top stocks to watch. Let's kick it off. Hi, guys, and happy Friday to all of you. We'll kick it off with Dr. Reddy's first. Vinny, not looking too good.
Yes, so in terms of numbers that have come out for Q3 FY25, not looking that exciting because we're seeing a miss that's come in on the profitability front. Revenue is in line with the CNBC-TV18 poll. But why the miss in terms of revenue growth? It came in at 15% overall revenue growth. India sales, decent growth that we saw. North America business, that was down almost 10% on a quarter-on-quarter basis. It's expected because the Revlimid sales are expected to start seeing a bit of an impact coming in and decline coming in. So because of that, North America sales on a quarter-on-quarter basis have been weak. India sales, like I was saying, we managed to see a decent growth of 14% on a year-on-year basis. What was aiding it? The acquisitions that they made recently. So Sanofi vaccine also is something that is the deal over there, plus the JV with Nestle is something that is supporting the growth in India business and overall the base business of the company. What didn't do well on the India side was the cardio as well as the gastro therapies. That was a bit weak. So in terms of core business in India side, that was a bit of a weakness or a slight bit of a blip on that front. EBITDA margins, they also saw a bit of an impact coming in. We saw a contraction in terms of EBITDA margins on a year-on-year basis, mainly due to the incremental competition in certain products, increase in some of the costs that are seeing and spends over there, as well as Revlimid sales that have been a bit weak, impacting the overall margins of the company. So that is why we're expecting red for Dr. Reddy's.
Okay, thanks a lot for that, Vinny. And we'll connect with the management of Dr. Reddy's in a few minutes from here on. So stay tuned for that conversation. Well, let's hop across to Sudarshan. He's been on top of a lot of these stocks, and he's here to tell us about HPCL. Sudarshan, how are the numbers?
Morning, Nigel. So if you compare with BPCL, earnings for HPCL are looking better. Earnings were largely in line with estimates. So some of the factors that have worked: first, both marketing and refining margin have seen an improvement on sequential basis, and marketing business, which is the higher contribution amongst all the OMCs. So volumes for the marketing segment have improved 11% QOQ, and refining margin was in line, and HPCL's GRM is higher than BPCL's GRM for the first time in last 4 years. And some of the factors that have not worked: first one is LPG under-recoveries. Under-recoveries have increased to 7,500 crore as of December from the level of 4,500 crore that company had reported as of September. And second, company is sourcing crude at a premium after Russian sanctions. Talking about the numbers, profit has come in at rupees 3,203 crore versus pool of 2,900 crore. Revenue has increased 10% sequentially. EBITDA too has come in higher at almost rupees 6,000 crore versus pool of 5,800 crore. And margin has increased to 5.4% versus 2.7% that company reported last quarter. And GRM has come in at $6 per barrel versus $3.10 barrel that company had reported last quarter. Brokerages, though, have a mixed views. First one, Jefferies maintains underperform call. Target is 295 per share. It says LPG subsidy could drive earnings upside, but valuations look stressed. Citi has a buy call and target is 450 per share. It says all eyes will be on budget for compensation to OMCs for LPG losses. But I'm going with green because earnings are in line with estimates.
So thank you very much for that. Mankind Pharma is the next one we want to focus on. Back to Vinny for that. Vinny, morning.
Good morning. So in terms of Mankind Pharma, inline set of numbers versus estimates, we cannot compare it on a year-on-year basis or a quarter-on-quarter basis because do not forget we have the BSV integration that has taken place in October 2024. So because of that, the numbers would look higher versus last year or last quarter. Revenues versus estimates in line, margins also largely in line. Profit is where we saw the decline coming in, and mainly that profit decline was due to higher finance costs. This time the finance cost was at around 221 crores. Higher debt is something that is impacting the company because of the BSV integration. So finance costs are the main reason for the decline that we saw coming in terms of profits. Domestic sales have remained quite good in terms of the performance, while the domestic prescription sales also saw growth in terms of overall the performance of the company. So yes, inline set of numbers, but maybe we could see a bit of a red coming in on the screen right now.
Okay, all right. So Mankind will be prepared for maybe that bit of red, like you're saying, Vinny. Let's go across to Rima. Rima, actually, we'll come to the IT companies in a bit, but let's first start with Indus Towers. How was the performance?
Well, the key positive is that from Vodafone Idea, the company has managed to recover 3,000 crore rupees. So there is a reversal of doubtful debts to the tune of 3,024 crore rupees. And this has pushed up the company's margins and profits. That's the key positive. So on the top line, revenue growth is flat, just up 1.1% sequentially, up about 5% on a year-on-year basis. But look at the EBITDA number. The absolute EBITDA is at 7,000 crore rupees. EBITDA margins at over 90%. Profits have gone up 80% on a quarter-on-quarter basis. If you adjust for this, then according to analysts, numbers are in line. The second positive is the free cash flow generation, which Citi points out is strong in Q3 at 2,700 crore rupees. They expect Q4 free cash flows to also be strong, which means the company could just pay out a 20 rupee dividend. The stock has been doing well. It's seen a lot of brokerage upgrades too in the last couple of, since the beginning of the year, and these numbers are strong.
Okay, all right. Thanks a lot for that, Rima. Well, it's a Friday and Mangalam joins us to tell us about United Spirits. Mangalam, ironic, right?
Well, what can I say?
The teetotaler on top of it. Mangalam, tell us, but those numbers look good.
These numbers look very strong, Nigel, and it may be a Friday cheer for United Spirits itself. Why do I say that? Because, you know, if you look at the revenues, 14.4% revenue growth, much above street expectations of around 12 to 13 odd percent. And it's led by prestige and above volumes, which came in at 11.2% versus street expectations of 9 to 10%. Revenues also grew by 16%. Again, street expectations were 14 to 15%. Popular, something that the company is not focusing on as much, that too grew by almost 6% from a volume standpoint and 10% on a revenue standpoint as well. So from a top line standpoint, it has been very strong. One would say, why is it that the EBITDA and net profit are then below expectations? It's because, the company has spent a little more on advertising this time around. Remember, it has been a seasonally strong quarter for companies, so they've ramped up ad spends. Gross margins have improved, so that's a positive. The net profit is below expectations, largely because of a 65 crore exceptional charge. Add that back, and the net profit too looks pretty strong. So my sense is that after the recent correction that we've seen in the stock price, we may see a bump up in today's trading session. All eyes will then be on the conference call that takes place at 4 p.m. This evening.
Absolutely. So set for a high, perhaps this is Friday, the share price, that's what I'm saying. At least the opening should be optimistic. Mangalam got that. But now back to Rima. Rima, your mid-cap IT players were sparkling yesterday. They were lighting up the market. But now this morning, Mphasis and Cyient, not that hot?
Well, Cyient is not hot. There are two negatives in Cyient's numbers. One, a guidance cut on both revenues and margins, and two, a CEO exit. So first on the top line, for FY25, the company's cut the guidance from flat revenue to minus 2.7%. And the key reason is right shifting of projects, which basically mean projects got delayed. And secondly, the margin guidance for Q4 has been cut from 16% to 13.5% on account of aggressive wage hikes. So that's reason number one, guidance cut. And secondly, the CEO, Mr. Karthikeyan Natarajan, has stepped down effective immediately. His term was for 3 years, but he stepped down in less than 2 years. That said, in the conference call, the company, the management commentary was fairly upbeat about the deal wins, growth coming back, the pipeline, etc. But JP Morgan today has downgraded the stock. Now, Mphasis, on the other hand, is an okay set of numbers. So on the top line, slightly lower than street expectations with a growth of about 0.2%, but the other internals are fairly strong. They've managed to maintain margins at 15.3% within the company's guided band. The deal wins are very strong. Deal wins have inched up to $351 million. That's a sharp jump. The large deal wins are the highest that we've seen in the last 6 quarters. Not just that, in January itself, they won a $100 million deal, which will kick in Q4. And the company, in their in the commentary, says that they will maintain above industry growth rates, and margin band of 14.6 to 16% is intact. So Mphasis slightly soft on the top line, but the other internals look good.
Okay, all right. In fact, we'll have the management of Mphasis who will be joining in later on the show. So we'll try to get further clarity with regard to the past quarter's numbers as well. But let's hop across to Upasana. She's here to tell us about Amber. How are the numbers, Upasana?
Well, certainly a strong set of numbers. It's a beat across the board. Revenue, EBITDA margins, PAT, all three above the poll estimates. Now, this strong performance was mainly driven by RAC demand, channel and inventory filling in anticipation of positive summer season. Now, let us look at the numbers first. Revenue stood at 2,133 crore with an uptick of 65% on a Y-on-Y basis, and this revenue growth was mainly driven by company's consumer durable division, which reported a strong revenue growth of 96%, and margins also increased by 160 basis points at 6.1%. Other divisions such as electronics, the revenue grew by 1.4 times, while railway subsystems saw revenue decline of nearly about 13% on a Y-on-Y basis. Now, EBITDA stood at 159 crores for the company with an uptick of 1.03 times, which was much above our poll estimates, leading to a margin expansion from 6.1% to 7.5%. Mind you that this overall margin expansion of 140 basis points was driven by company's RAC margins. And lastly, coming to PAT, it stood at 37 crores versus the loss of 0.5 crores, which was much above our poll estimates of 23 crore. So all in all, strong set of numbers coming in from Amber Enterprises in its Q3 FY25.
All right. Thank you very much for that, Upasana. Let's talk about financial services now. Ujjivan Small Finance Bank and Spandana Spurti are the ones we want to address. Abhishek is here with details on both. Abhishek, morning.
Morning, Prashant. So stress in rural or, MFI book has weighed on the performance of both these lenders that you have mentioned. To begin with, Ujjivan Small Finance Bank, they have given an update that they will apply for universal banking license in Q4 FY25. 7-quarter high with respect to gross NPA ratio coming in at close to 2.7% versus 2.5% in the previous quarter. The slippages are elevated at about 359 crore versus 238 crore in the previous quarter. Annualized slippage ratio has inched up to 4.7% versus 3% in the previous quarter. So multi-quarter high with respect to slippages as well as annualized slippage ratio. Net interest margin is at 13-quarter low, while return ratios, that is ROA, has fallen to 1.2%, which is a 12-quarter low. Spandana Spurti, it's a disaster of a number that you are seeing over here. Disbursals are down 43% YOY and about 4.7% sequentially. AM is down about 14% YOY and about 15% sequentially. The net interest margin has declined as well, both YOY and quarter-on-quarter. The net interest margin has declined. The write-offs, now this is very important, the write-offs are at 678 crores versus the gross NPA in the previous quarter being around 477 crore. Last, I have not seen this kind of a write-off, that write-offs are higher than previous quarter's gross NPA in, BFSI sector. So return ratios, ROA minus 16.2%, ROE minus 52.4%. Net interest income is down 14.7% YOY and about 24% sequentially. They have more than tripled their losses in, quarter-on-quarter basis. So they have reported a loss of 658 crore versus 203 crore in the previous quarter. Back to you.
Okay, all right, got that, Abhishek. Thanks very much. Let's quickly recap our list of stocks to watch today. The ones that have positive news around them are HPCL, Indus Towers, United Spirits, Mphasis, and Amber Enterprises, all these positive earnings. The ones that have some negative news flow around them are Dr. Reddy's, Mankind Pharma, Scient, Ujjivan Small Finance Bank, and Spandana Spurti. Okay, so that's the stock list. Now let's take a look at the commodity market action overnight. We've got Manisha Gupta joining in with the latest. Manisha, good morning.
Morning, and thank you for that, Survi. Well, major cues coming in from the crude oil prices there, where we are headed for a sixth straight daily decline there. And when you look at this week as well, this is the worst weekly performance that crude oil is putting since the month of November. We're down by more than 5% for both these varieties, and much of this comes in on the back of U.S. President Trump's statements, especially in Davos as well, as he said that we are looking to increase more production, especially in U.S. when it comes to offshore and onshore drilling. He also said that Saudi Arabia and OPEC should work towards lowering the crude oil prices. The Chinese demand concern is still weighing onto the market. And then with the kind of ceasefire that we are seeing in Middle East, that premium also seems to be getting away from the prices. Well, the charters tell us that it is slightly oversold right now, but if Trump continues to reiterate the kind of statements we are hearing from there, you could be looking at further decline coming in for the crude oil prices. We're looking at $74 a barrel holding for the WTI prices right now, but the markets do believe that 72, even 70 on the lower side could be on chart.
Oh, okay. All right, Manisha, got it. And who's to say U.S. President is rooting all out for lower oil prices, and I think the market's actually following him, at least for now. Thank you very much for the details. We'll come back to you in a bit.